Hello everyone, in this video, we are going to learn how we can generate an alert for strategy when your instrument type is future options and options. Firstly, you have to go to app.pickmytrade.io and then log in. So now you have been directed to the home page, and here you have to go to the Generate Alert section. Here, in the broker, I will select my broker as IB. In the alert section, I will select strategy. In instrument type, we will select future options. In the option type, we have two options, call and put. Let's understand them. For example, let's say RSI showing oversold condition and opportunity of market to go up. So here I will select call. And in case the RSI is showing an overbought condition, there is a condition for the market price to drop. Then I will select put. The next option we have is order a strike away. So, to learn this part, we will need to go to Interactive Brokers. Now I will tell you how we can add a new window for options. So you have to click on New Window. Then here you can see these three options. So here you have to click on Option Trader and you can see the new window open. Here I have selected the financial instrument as NQ. So this is how the Option Trader window appears in Interactive Broker. Now we will learn about the order strike away. Strike away tells PickMyTrade how far away in strike levels you want your option to be from the current market price. PickMyTrade will automatically select the strike price based on the current market price at the time of alerts triggered. Here, NQ is trading at 18,574.50. The price which is closest to the current market price is 18,575. So here, if I want a strike price at the money, then I will put here 0. So here I will get my money. Similarly, we will move to the next part, the money calls. They are also called ITM calls. So, for call options, ITM calls are the strike below the market price. So here, if my NQ is at 18,574.50, then my ATM call strike will be at 18,570. So if I want 18,570 as my strike away price, then in PickMyTrade, we'll enter -1. Here if I want the strike price to be 18,560, then I will put -2. So that's how you will get the ITM calls. Now we will move to ITM puts, which are also called in the money puts. It is the opposite of ITM calls, as the strike price is above the market price. So here my market price is 18,574.50. Then the strike price for my trade will be from 18,575 to 18,610. So if I want the strike price to be at 18,580, then in picking my trade, I will put here -1. Here if I want strike price to be 18,590, then I will put -2. Now we are going to cover out of the money calls and out of the money puts. Let's understand the OTM calls or out of the money calls. So these are the strike price above the market price. So if my current market price is this, then the OTM call strike price will be at 18,580. So if I want to get this price, then in PickMyTrade, I have to enter 1. Here if I want the strike price to be 18,590, then I will put here 2. Now let's learn about OTM puts. So put itself means the strike price below the market price. So here in this condition, my OTM put strike price will be these values. And to get those values, in PickMyTrade, you will have to enter 1. Here if I want the strike price to be 18,560, then I will put 2. Now we will learn about the option expiry date. Every option has an expiry, and when that time hits, the option ends. Let's break down each setting. The first option here is the current day. This select the current date of expiry, means if today is 2 of May, then the option will expire today itself. If you are trading on intraday or scalping, so you can use this. Next one is next day. This will select the expiry of the next day. If you are trading today, so it will select the expiry of tomorrow. Means, if today is May 1st, then the trade will be expiring tomorrow on May 2nd. It will be helpful for overnight trade. Now we have the option of the day after tomorrow. This will select the expiry of the day after tomorrow. It means if you are trading today, which is 6 of May, then the expiry will be on 8 of May. But if in case your trade does not have any valid expiry, then PickMyTrade will auto-select the valid expiry for that trade. Then we have the option of the current week. It selects the expiry of the end of the trading week, which is Friday of every week. Then the next option is next week. It will select the expiry of the end of next week. Means if today is the 2nd of May, and today is Friday, so the expiry of the trade will be next Friday, which is on May 9th. Then we have the option of the current month. This will select the expiry of the last trading day of the month. So if the running month is May, then the expiry day for trade is May 30th, which is the last Friday and last trading day of this month. Then we have the option of next month. This will select the expiry of the last trading day of the next month. So if the running month is May, then the expiry day for trade is June 27th, which is last Friday, and the last trading day of that month. Let's say you're buying a put with current day expiry, the theta might be -120 per day, but that same option with next week expiry might only lose -30 per day. So the closer you are to expiry, the faster the option loses value even if the price stays still. That's why expiry choice isn't just about timing, it's a key part of your risk and reward. Here you have to select the symbol. I am going here with NQ1. Here is the option which asks you, would your strategy have multiple exits like TP1 and TP2? So, if your strategy have multiple stop losses, already defined in the Pine script, then you can just select yes and move for further steps. But if you don't have it defined, then you have to select NO. And here is the option of risk management. Here we have 4 types of stop loss or take profit type: points or dollar from entry price, percentage, ticks, and total profit or loss. So first, we'll start with a point or a dollar from the entry price. For example, let's say, buy for NQ comes at 21,891. And if I want to set stop loss at $50, so I will put 2.5 in this section. So here total loss for one contract is going to be $50. When you click on this question mark here, you can see the calculations. Similarly, if I want to set the take profit of $100, I will keep it as 5. And here you can see, the total profit for one contract is $100. Now let's move to the next part, percentage. Here you can set your stop loss and take profit in percentage. Let's say your entry price for NQ is 21,891, and you want to set the stop loss of 20%. So the system will calculate 20% of 21,891, which is around 4,378.20. So your stop loss price becomes 21,891 minus 4,378.20. That is 17,512.18. For take profit, if you want to take 100% take profit, you can set here 100. So simply it will double your entry. So as your entry price is 21,891, then your take profit will be 43,782. Now let's learn about the ticks. Let's say you are trading in NQ, where each tick is 0.25 points and each tick is worth $5 per contract. If you enter a stop loss of 5 ticks for one contract, so the final calculation here is $25. Similarly, when you place 10 in the take profit, so per contract my take profit will be $50. Now we will move to total profit or loss. Here, you just say, I want to risk $100 per contract, and the system does the rest. And when I set 100 here, so the total loss for one contract will be 1,000. So now after setting everything up, you see this account selection. So let's say here it says, would you like to add multiple accounts or select a specific account for trade execution? So you can just select yes or no based on your requirement. And when you click on Generate Alert, my current IB account, which is connected, it will be shown in the dropdown. And when you click on Add Alert, the alert will be generated. So here you can see the alert is generated and those are my JSON value. So I will click here, so my JSON will get copied. Then you will go to your TradingView. Then you will go to this option. Then you have to click on the plus icon. Here in Settings, here you have to select your strategy you are using, and here in this message box, you have to paste your copied JSON. Now you will go back to PickMyTrade, and click here on Copy Webhook URL, and in the notification section, you have to paste this URL here. And when you click on Create, your alert will be generated. Now, as my chart is for 1 minute time frame, my alert is generated for 1 minute. So, by mistake you generated it for 1 minute and want to change it for 5 minutes, so in this case, you can just select this edit option, and in the interval, you have the option to change it. Now I can change it to 5 minutes and just save it. So whenever your alert gets generated, you will be notified here in the log section. And if you want to add multiple accounts, you just need to keep those options the same. And just click on Add Account, and just fill in all those details here and click on Add Account. And when you generate an alert, your alert will get generated for all those added accounts.